In this new video series, go behind the scenes of our prop firm, which houses numerous elite 7- and 8-figure traders, to learn our techniques and processes for producing robust, high-accuracy options trading strategies. In this case, a powerful options strategy with an 85% win rate. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In part 8 of this new video series, learn a key trading principle. Joint accounts can lead to elite trading that has helped our traders thrive, and how that drove the development of this new and powerful option strategy for you. Let's get to work on sharing this important trading principle and trading strategy so that you can grow your trading account. We started SMB in 2005. We've had a ton of great ideas that have helped the development and growth of traders, but perhaps the very best idea that we've had since the beginning of our firm has been joint accounts. And let me explain what that is. Joint accounts, in one sense, are where 2 or 3 or 4 traders team to trade ideas. In one particular way that they develop edge, all of the traders have to agree on a trade. All of the traders independently have to agree on the trade. The ROI on these joint accounts is extraordinary. Think about it. Think about this one particular way that terrific ROI is produced. We're taking one trader who has edge in a trade and placing a trade only if another trader or traders who also have edge in this trade agrees. If they all don't agree, the trade isn't taken. What's going to be a more effective trade? When one trader with edge in a trade sees the edge, or when multiple traders who have edge in a trade see the edge. And then what also happens in these joint accounts is one trader helps the other traders express the trade better. A trader finds a better way to structure or take the trade. Perhaps options are suggested as a better way to express the trade, for example. And then the option strategy is discussed to express the trade. Let's get long XYZ stock can be much more effectively expressed, perhaps, with an options trade than originally considered as just an equities trade. There can be edge in a trade. Also, there can be edge in the expression of the trade. When you start combining those, you again get a much more effective trade. If you're walking our trading floor, you can hear traders talking about a trade and then a trader suggesting the expression of the trade in a better way. There's a humming, there's a bantering, there's loud talk about this when you walk the floors of our office. You can hear them calling out these ideas, and the traders quickly determine the very best way to express the trade. It's not just let's get long XYZ stock, but rather how do we take the trade in the best way? And when you can do this, you can trade bigger. You can trade bigger because the risk reward on the trade is better. Joint accounts are a critical part of the trading we do at this firm. It's some of the best trading that we do at the firm. I spend a great deal of my time encouraging traders to open up joint accounts with other traders that they have not so with yet. This is a major potential area for growth for our firm. And joint accounts are fun. Swang, one of the top 3 traders at the firm, and to be in the top 3 at our firm last year, you needed to net $18 million in trading profits for the year. Swang loves joint accounts, and I bring up his P&L because it cracks me up how much fun he has with his joint accounts, even though the P&L is so much less significant than his primary firm account. He's opened up joint accounts with many on his team, and these junior traders are nowhere near his skill level yet, nor put up anywhere near the P&L that he does, but they bring unique skills to potential trades. They bring research ideas to him. They bring different sources of edge, which then Swang can take with his awesome execution skills and make better trades than he can on his own. And in their joint accounts, remember, he's trading much smaller than his primary trading account at the firm, but I swear, Swang won't stop hitting me up on GChat about the success he is having and his junior traders are having in their joint accounts. He's so proud of the work the junior guys are doing, bringing ideas to him and then trading them in their joint accounts. He's so happy to see these junior traders making so much more in these joint accounts than they can presently in their primary accounts at the firm. He's like a proud father beaming to his colleagues about his son's important accomplishments. Seth, what I love about the weekly options income machine that you developed with Scott is that it mimics the development of the very best trading we're seeing on our desk. Scott combines his edge with his signal with your edge, structuring the trade, expressing the trade in the best way to create an effective strategy, a strategy that is much more effective than your team and you could create by yourself, a strategy that's much more effective than Scott and his team could create by themselves. So Seth, can you tell us how you combined edges to create this winning strategy?
Mike, for years, the options desk was looking for a way to take our options trading knowledge, and specifically the put credit spread strategy and the call credit spread strategy, otherwise known as vertical strategies, and apply those against viable, solid signals of which way the market would move on any given day. The problem was we weren't able to find any signals that met our standards. In 2020, right as the pandemic was breaking, I met Scott Andrews from InvestaQuant in our offices here, and we began to chat about the signal that his team had developed and the incredibly strong techniques and process they went through to develop that signal. The fact is that the IQ signal on its own is astonishing. When that signal triggers, it has 71% accuracy as to whether the market will close higher than the open on a bullish signal or lower than the open on a bearish signal. We knew, because of our knowledge of options credit spreads, that we could increase that win rate sight unseen. We knew that because of the nature of credit spreads, and we'll explain that to you in a minute. We were able to get Scott's signal up to an 86.4% win rate simply by using the options credit spread strategy. So let me give an example to drive home the point I'm making. Look, we realize that most retail traders don't necessarily have full access and understanding of all of the option strategies available to implement in the most optimal way a powerful signal like the IQ signal that we've shared with you in this video series. And so SMB has taken care of that for you. We've developed a highly profitable one-day options trading system based on the IQ signal that can easily be implemented by traders of any experience level in just minutes a day. If you're interested in learning more about exactly how that system works, go ahead, click the link that should be appearing now at the top right corner of your screen. That's going to open up a free workshop registration page in a new window, so don't worry, you won't lose this video. I think you're going to be pretty intrigued by what we've developed for you, so pause this video, sign up now, and then resume watching. Recently, the market opened up at 4408, the SPX index specifically. On that day, the IQ signal was triggered, and it was triggering a bullish trade for that day. So with the use of a put credit spread, in this particular case, we sold the 4400 SPX put that expired that day. We received $505 for that. We simultaneously bought the 4380 put expiring in that day, and we paid $185 for that. The combination of selling a put closer to the market and buying a put farther from the market is called a put credit spread. So if you subtract out the 185 that we paid for the put from the 505 we received for selling the 4400, you get a net premium of $320. That premium goes right into your account as cash. You'll see that appear in your account the second after you execute the put credit spread. Well, that day, even though we got a bullish signal, the SPX closed at 4402. It actually closed lower than, slightly lower, but it closed lower than its opening price of 44.08. Nonetheless, the 4400 put expired worthless, and so did the 4380 put expire worthless, because both of those options only pay off if the market closes below the strike price of those options. Well, as a result, both of those options expire worthless, they settle for zero, and we get to keep that $320 that we received initially for selling that put credit spread. So what's the moral of this story? The moral of this story is that even when IQ signals a little bit wrong, which it only is 29% of the time, even when the IQ signals a little bit wrong, we still turn that into a complete options win. That's how we increased the win rate of IQ signal from 71 to 86. We took those instances where there, in 14 or 15% of the instances where IQ signal was a little inaccurate, we were able to turn those into options wins in many cases. That's how we were able to combine the knowledge of SMB's options desk and the very powerful signal that IQ has developed, and that combination produced this astonishing win rate of 86.4%.
And Seth, correct me if I'm wrong, but you also were able to cap the risk in the trade as well.
Yes.
Whereas the signal could be open-ended in how much it could have lost.
That's exactly right, because if you think about that trade that we just explained, the long put puts a floor on any loss, because once the market sells off below 43.80, if that were to happen, that long put would increase in value at exactly the same rate, dollar for dollar, that the short put that we sold is losing value. And so it puts a floor on the trade, which makes your drawdowns substantially more mild, or prevents you from being stopped out of the trade completely. You're able to stay in every trade by adopting the put credit spread model as a way to express the signal. Options credit spreads have this built-in stop, and that stop allows you to take a signal which every once in a while is very wrong and have a very reasonable and mild drawdown arising from that situation. 71% of the time it's going to be flat out right. Another 15 points, up to 86% of the time, it's going to be good enough that we're going to be able to make a very solid options profit. On those few times where we lose, we're losing a very mild and acceptable amount because we're using the options credit spread technique. Because it's got a built-in stop, it allows the trade to play out fully. That's an extremely important point. Many times the market will move against the signal initially and then close the day very strongly in favor of the signal. If you're stopped out of the trade, you don't get to enjoy the benefit of the market actually reverting to what the signal had predicted. And so the spread not only keeps your drawdowns mild, they allow you to stay in the trade, period, which is a big deal. There is no exit necessary with credit spreads. It's what we call a set it and forget it trade. In fact, we put this trade on at 9:30. We are done working on that trade. The market will determine the outcome of that trade. Now, Scott, I know how using the Options IQ signal to inform our credit spread trades has helped SMB. How has it affected the trading at InvestiQuant?
Well, it's helped tremendously because if you may recall when I approached you with this idea, the challenge we had was you had this great signal that had a very high win rate, but when we modeled it for trading futures, which is what I do and our firm does, we had drawdowns that were just intolerable. They were too big. We couldn't stick with them, and we weren't really able to take full advantage of the signal. So we couldn't trade it, frankly. So we haven't traded it for years, but we've been thinking and looking for a better way to be able to express the signal. And your eyes did light up the first time I met you, and said, "I think I've got something here. If you could help me figure out how to model it with options and trade it with options." and it has. So it's exciting now because I've been trading it myself. Even before we finished the research, I started trading it in my own account. So it's been great. It's very exciting. It is the power of teams, right, and smart people getting together, and a lot of times traders don't do that. And I do applaud Mike and Steve and the team here for being open-minded to bringing in outsiders, and as well everything you do here is all about teamwork. So very exciting, and appreciate the opportunity.
So, Seth, I thought I heard you say something that is a posit to lots of stuff that we actually preach here on our desk, on our discretionary trading desk. And I think I overheard you say something that we'd really actually never say to our discretionary traders, but maybe it's okay to say this for this particular strategy, as it's different than what we do on the discretionary trading desk. But I'm pretty sure I heard you say that you almost want to teach people who take this strategy to set it and forget it, meaning set it, and I think you were half joking about this, set it, go play golf, come back, and then see how it did. And again, I wouldn't say that to any of the discretionary traders on the desk,
right.
But for this strategy, I think you almost suggested that was a good thing to do.
I actually do think it literally, legitimately is a good thing to do, and let me tell you why. This signal was tested, and the whole strategy was tested with the assumption that we put the trade on in the morning and do not touch it. We simply let those options expire at the end of the day. There's a reason behind that, and the reason behind that is many times the market will appear to be going against the signal initially and then run in the right direction by the end of the day. If you're sitting there micromanaging the trade, even though we put in 10 months of research which should convince you to have confidence in the trade the vast majority of the time, then if you sit there micromanaging it and trying to outwit the market, you will be outwitted yourself. We proved through some of the research we did included looking at taking stops during the day, and there was no better expectancy resulting from this strategy than leaving it alone. You put it on, you trust your research, and then the market resolves it at the end of the day. So this is one case where getting you out of the office on the golf course will be better for your net worth at the end of the day. I know that sounds crazy, and it's not the normal work ethic of a prop firm, but in this case, it is smarter to leave the trade alone and let the statistical basis of it and the historical edge of the strategy play out as we designed it. By combining IQ's tremendous edge with the 71% win rate, with our knowledge of option spreads and how to express a signal such as that in a way that substantially increases the win rate and therefore increases the expectancy of the strategy, we were able to combine to help both firms. We needed a signal. Scott needed a way to express his signal with a stop that had positive expectancy. Both firms benefited. That is the strength of combining edges. So as I mentioned earlier, regardless of the type of trader you are and your experience level, you can utilize our system to augment your main trading activities because the IQ signal only occurs 2 to 3 times a month on average and can be executed in under a minute the few times per month that you do receive a signal. We'd encourage you to attend the webinar where we can offer you this system at a huge discount. So just go ahead, click the link that should be appearing now at the top right corner of your screen. That will open the free workshop registration page in the new window. I think you're going to be pretty intrigued by what we've developed for you. So sign up now to arm yourself with this powerful trading signal before it's too late.